So I'm going to ask you to do a little role-playing exercise and pretend that you're all finance ministers, just for 5 minutes, no pressure. So imagine that a disaster struck today. The 8 o'clock news would show those images that we've seen time and time again, the death, the destruction. Ministers know that the decisions that you will take, the decisions you will take now as to how to allocate the scarce resources you have available will make a huge difference on how those will come in to help. Or maybe there's something you could have done ahead, and that is what financial protection is all about. Financial protection is about your ability, the finance minister's ability, to manage your contingent liability effectively and protect your budget and your citizens from the impacts of disasters. You have a range of tools available that range from budgetary tools to market instruments and financial instruments, and can be layered, combined together in what we call the layering strategy. So it seems like financial protection might be worth it for you as a finance minister, but you're careful with your money, so you have a few more questions. You want to know, well, how do I know which tool for those questions? You need better evidence. You need evidence to be able to quantify the cost and the benefits of financial protection. Of course, it's not easy to do. You need to be able to compare, on the cost side, you need to be able to compare the price of budgetary instruments and of financial instruments. And we've started to try and develop an approach to do this. And we think we're close to it, and it helps us calculate what the most cost-effective combination of these tools is in a specific country's case, and that's those colorful Tetris-like bars up there, and you will hear more about it at our session tomorrow morning. On the benefit side, we have to be able to understand what the economic benefits of being better financially prepared might be. And that's, again, not an easy thing to do. Let's take the example of Mexico. Fundan, which probably many of you are familiar with, it's one of the most sophisticated programs out there. And so how is Mexico reaping the benefits of being better financially prepared thanks to Fundan? Well, the sort of most obvious way is money. Fundan disperses money to the government of Mexico to pay for reconstruction in the event of a disaster. But money is only useful if it's disbursed reliably and quickly after an event. And that's where discipline and speed come in. Fundan has forced the government of Mexico to set up rules, disbursement rules, that define how and when the money is disbursed. And what that does is that it takes the political decision-making process and it moves it ahead of a disaster. So it does not become a delay or a hurdle when you need money quickly after a disaster. Likewise,